Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And good morning. It's time to check in on your money and find out what's going on Wall Street. We're in one of those days in which, because the markets are going to be closed on Thursday and the government's going to be pretty well shut down on Thursday, we get a whole bunch of stuff early in the process, and we've got a lot of economic news running early this morning, and it hasn't all been good from the standpoint of the marketplace. Phillip Statler from Statler Financial Services is here on the line. Good morning, Phillip. How are you?
Hey, good morning, Dave. A little chilly, but other than that, doing okay.
It really has been a chilly morning, and it's going to be even worse tomorrow morning. Setting the table, I was in the process of looking at my ticker because one of the numbers that we were looking for just came out as well. It was a sell-off yesterday, not a major sell-off, it's still a sell-off. Dow was down by 178. That's 0.42%. So let's not panic over $178 drops in the Dow. Standard & Poor's was down over a full percent, though, down 66 yesterday. And NASDAQ was down almost 1.9%, $375 down. And, you know, it's all that was mostly being credited to a report that you and I always pretty much just blow off each month when it comes out. It's called the ISM Manufacturing PMI report that showed the input costs for manufacturers are close to a 2-year high. And that pretty much gave investors the notion that, whoopsie, inflation ain't conquered yet. And boy, did they panic.
They did, Dave. They did not like that number, and I think that really caused some panic in the marketplace yesterday. That and Nvidia's little thing they did yesterday. So we'll see what happens today.
Yeah, the little thing that NVIDIA did was the CEO was doing a keynote address at the Consumer Electronics Show out in California. Quantum computing is the really hot new thing they're talking about. And a bunch of really adventurous NASDAQ-listed firms are working real hard on quantum computing. And without getting into the weeds too terribly far, it boils down to basically making computing kind of analog. Well, NVIDIA's on the cutting edge of building the chips that'll support that, but he told the CES crowd that a quantum computer was 15 to 30 years away, and everybody ran away like scared rabbits from those quantum computing stocks. It was almost like lemmings jumping off a cliff, wasn't it?
It was. They didn't like that at all, the tech sector. And I think that added to the NASDAQ's fall off yesterday, because it definitely was not a pretty sight to see.
No, that's why I said, okay, fine, 0.42% on the Dow. That's a down day, but it's manageable. When you get down to 1.9% drops on the NASDAQ, something went haywire, and that was pretty much the story of what happened. We got a bunch of things coming out today because the week is getting kind of messed up. Number one, I did see the first-time jobless claims headline. They fell this week to a nearly 1-year low in advance of President Trump taking office. I don't have the absolute number, but they went down. You put that together with the JOLTS report saying that job openings went up, and well, if the Fed's goal is staying around 4% unemployment, it looks to me like 8.1 million jobs and fewer people filing for unemployment. We still have a pretty loose employment market, don't we?
Yeah, it looks that way, Dave, as we continue to look at jobs and there's more openings, less people on unemployment. So, I mean, that sounds to me like a good problem.
It is, except we're watching inflation, and if there are more openings than there are people looking for jobs, you know what that means. If you want to get a burger flipper, you're going to have to bid the price up, and that's called wage price inflation, which, yeah, we all like to make more, but we really don't want the macro number to be able to push the inflation rate back up closer to 3%, right?
Oh, that's right. Yeah, we don't. We'd rather have more people trying to chase more jobs.
Yeah, but the ideal, of course, is to have the number of jobs match the number of people looking for them, which is always an ideal world. But even so, the other number that came out was the ADP number. That's the big payroll service that projects how many private sector jobs came out. What did I do with that number? I had it written down. There we go. We produced 122,000 private sector jobs last month, which doesn't sound bad the way things have been performing, but the market was expecting 130,000, and we produced 146,000 last month. So it's not necessarily going in the direction that President-elect Trump would like to see, right?
No, it's not. And the other thing that came out in the ADP report was wage growth. ADP said wages grew by 4.6% from a year ago. Now, that's the slowest pace that they've seen since July of 2021.
In other words, barely keeping up with inflation now, but at the same time, if we actually keep inflation down to 3%, we're gaining against inflation that we had for the 2 years before that.
That's right. We're making some headway there.
I'm trying to put some lipstick on the pig that we're getting this morning. I'll admit I'm not doing well at it, but I'm trying. All of this ends up factoring into, number one, the beginning for earnings season, which is coming before too long, but the fact that the Federal Reserve is going to have their next open market committee meeting on the 28th of this month. We're talking about 3 weeks from now. We start that whole goofy cycle all over again. This afternoon, they're going to release the minutes from last month's Federal Reserve Open Market Committee meeting, and that means starting in about a week or so, we're going to start trying to read tea leaves as to whether or not the Hawks or the Doves are going to win at the end of the month this year, this month. And it sounds like a split vote going on based upon what Chris Waller was saying on a rubber chicken speech yesterday.
I don't know. That may come. We may get some tea leaves tomorrow. I'm looking at the Fed speaks tomorrow. There's 1, 2, 3, 4, 5 of the Fed governors and presidents are speaking somewhere tomorrow.
We knew they're going to do it because in about a week and a half, they're going to have to get into their shut-up mode. I figured when I saw Chris Waller out on the rubber chicken circuit, more were coming today, weren't they?
Yep, exactly.
So it's an unsettled time, and that explains why something that normally we'd blow off like that ISM report ends up making a big change because investors are touchy, and they're evidently running away from bonds too, because you and I were sharing the interest rates on 30-year bonds on the federal on the yields. What kind of yield are we looking at now? You said we're bumping our nose on 5% now.
Yeah, the 30-year Treasury is bumping its nose on 5. It's at 4.96% this morning. So, and that's a big factor. It's not so much what the Fed does as the Treasuries when we start looking at mortgage rates.
Yeah, they're actually kind of vetoing the Federal Reserve. The Fed ends up reducing the reference interest rate that gives the implication as to what they'd like to see. And then the bond markets bid the yield up, and that's the real rate that people end up paying and affects mortgage rates, credit cards, and all the rest.
That's right. And so, we're seeing that almost at 5. We're seeing the 10-year at almost 4 3/4. So, interest rates have definitely continued to rise in this economy that we're in.
Absolutely. We're not into earnings season yet. A little later on today, my understanding is a couple of household names end up reporting. We'll probably have Albertsons to talk about tomorrow morning, and that could be interesting given the fact that the federal government got involved in messing up that merger with what was the other firm? Kroger, that's right.
Kroger, yeah, I think they were going to merge with Kroger. So
yeah, it's going to be interesting to see what they report on that front. Downgrades and upgrades and whatnot. Tesla was one of the stocks that tanked yesterday, fell 4% after Bank of America downgraded the stock to neutral from buy. They just released information that their sales in China had gone through the roof, and that bid their stock up. Then Bank of America throws a fly into the ointment and downgrades them. So Tesla was down like 4% yesterday. That didn't help the NASDAQ either, I'd wager.
No, it didn't. And that, that's Tesla, Nvidia, they all kind of had a rough day yesterday. So we continue to see what's going to happen. We pray and hope that, on the 20th, when things switch over, that we'll see some bumps again in the marketplace.
And that's the question. Right now, we got you add to all the uncertainty in the economy, we've got people reading tea leaves as to what the Trump administration will do first, And I always preach, money is not political. It just looks for other money it can make more money next to. And when we don't know for sure which category is going to benefit first, the big money guys are shuffling literally hour by hour trying to figure out what the possibility is that the Trump administration will actually prioritize and do first, and that just adds more volatility onto the market. It's not necessarily a bad thing, but it's trying to make bets as to what's going to happen first after the 20th of January.
Well, that's right. Hey, just across my ticker, I just saw Cal-Maine Foods actually reported, the big egg producer.
Yeah.
They earned $4.47 a share. Revenue was a pretty good size increase from last year. They're up almost a little over 4% this morning.
Cool. Good to have one bit of good news to start the morning. Maybe we'll float green as the day progresses. Yesterday it was all red, 45 minutes before we open. What are we looking at today?
Yeah, let me find the right button. Here we go. So we have it's a mixed. It's not much today, Dave. Sorry. It's the Dow right now is flat. The S&P 500 is flat. The Nasdaq 100 is down less than 0.1%, and the Russell 2000 is the big loser right now, down about 0.75% this morning. So that's where we are on that side. On the other side of the coin, we've got silver up about 0.1%, gold's up about 0.3. Crude oil's up another 0.2 to $74.41, which is about where it was yesterday.
In the range where it was day before, too. I mean, we're kind of falling into that 74 range nobody likes. Overseas markets, the Asian Rim kind of, well, I won't call it a sell-off, but it definitely was all red. The Hong Kong market's off the better part of 1%. One of the Chinese markets was flat. The other mainland Chinese market was down by 0.5%, and that dragged everything down in the Asia-Pacific Rim. Over in Europe, we're pretty much in foul humor this morning. The Great Britain markets are off by 1.8% this morning. Everybody else is pretty much flat to 0.5% down type numbers. Overall, the overall European index is down about 0.5% halfway through the European trading day. I'm getting my retirement together, so I don't need to worry about what they're doing in Europe or what Elon Musk and Tesla or NVIDIA do day by day. That takes a plan. How do I find you to get my retirement in shape?
Devin, give us a call at 863-382-0037 to schedule their core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And tomorrow morning, you and me together again, hopefully with some good news at the end of the day. Flat we can recover from. Big sell-offs we don't like, right?
That's right. That's right. You have a great day. I'll talk to you tomorrow.
See you then, sir. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, thanks for joining us today. I hope you're doing well. Join us again tomorrow. Take care. Bye now.